This is a huge week for traditional stock markets as well as crypto with everything that's going on. We have CPI coming out tomorrow, which is expected to come in a little bit softer than last time. If so, then the Fed meeting, which is Wednesday, it gives them ammunition to pause, although they will guide that there will be future rate hikes, I'm sure, which is known as a hawkish pause. And then we have job reports coming out Thursday, but the Fed will have already made their decision by then. So really right now, all eyes are on the inflation print tomorrow. If it comes in hotter than expected, the Fed might surprise the market and go ahead and adjust by 25 basis points. If it comes in softer, then right now the market is betting that the Fed is going to pause. There's no guarantees, but that's what is likely and what has been telegraphed, although it's not a slam dunk. The market is pricing a 70% chance that the Fed will pause. So there's still a 30% chance that they might not. And again, that's all going to be based on the inflation. Fed makes their decision on Wednesday. Markets will react accordingly. And then the other situation that we have, obviously, is the ongoing situation with the SEC suing Coinbase, suing Binance, and potentially the Department of Justice about to level criminal charges against Binance and CZ. One of the interesting things there, so in the midst of all this, one thing to keep in mind is that this is just a lawsuit. They're allegations, just like against Trump or anybody else. These are allegations. You can accuse anybody of anything, and you get your day in court to present your case. So just because the SEC is filing a suit and says that certain altcoins are securities or whatever they want to say, it doesn't make it so. The judge's ruling is what's going to ultimately prevail in terms of determining what's a security, what's not, and whether or not the exchanges are operating legally, illegally, and what they have to do. So a lot of speculation, a lot of back and forth. But one of the interesting things that came out of what Gary Gensler has been saying was that on CNBC a couple of days ago, last week, he said that we do not need another digital currency. So that was a very interesting remark. And sort of a tell in terms of a possible agenda of, an overall assault on crypto and Bitcoin in terms of a threat to current monetary, to the dollar, basically to currency, and to, central government control. That was a very interesting comment that he made there. And in response, a couple of senators have sponsored a bill to have Gensler removed. So a lot of interesting developments out there. And one of the things I want to take a look at is a tweet in terms of the criminal situation that has not been filed yet, but potentially could be filed against Binance and CZ. They just added a uniquely qualified criminal defense all-star lawyer. This is the tweet from John Reed Stark, who is the former chief SEC Office of the Internet. He was the former chief of the SEC, the Office of Internet Enforcement. He's been on a lot of spaces lately, as well as a couple of other securities attorneys talking about this whole situation. But anyways, CZ and Binance added George Canellos, former chief of the Major Crimes Unit in the U.S. Attorney's Office for the Southern District of New York and former head of the SEC's New York office and former SEC Enforcement Division co-chair. Highly qualified individual. Canellos possesses a rare and remarkably special combination of skill sets, having served as both SEC prosecutor and DOJ prosecutor. Think Liam Neeson meets Perry Mason. Very unique set of skills, right? Binance is clearly preparing for a criminal prosecution and continuing to hire the best defense attorneys in the world, which they should and can obviously do. But John Reed Stark goes on to say, I doubt even Iron Man, Captain America, and the Hulk could get Binance out from their current perilous legal quagmire. So we'll just have to see. There's a lot of allegations, a lot of things that are yet to unfold. We haven't seen the documentation, the evidence. We haven't seen, what has been, what the SEC's collected to bring these actions, because they waited an awful long time. Who knows what that reasoning was? Maybe they're waiting to gather evidence. Maybe they needed, more support. But this additional attorney was added today. So this is a, filing in the United States District Court for the District of Columbia, adding that attorney as part of the defense team for Binance. And they could be, negotiating with the Department of Justice. A couple of years ago, the Department of Justice was split on whether or not to charge Binance and things like that. So again, it seems to me that Thomas that given the gravity of the fraud allegations by the CFTC and SEC, which might also be the tip of the iceberg of any criminal indictment, a DOJ prosecutor would certainly seek prison time for anyone convicted or pleading guilty to Binance-related crimes. So again, we'll just have to wait and see how these things unfold. So let's go ahead and jump in the charts here. Take a look at what's going on in the markets, just kind of hanging out. A couple of interesting things we'll look at here, just hanging out, around that 618 level. Pretty much all three of the indexes. A couple of them have tested, the 618 and rejected, like the Dow, kind of just above the 618 right now, testing that level. The NASDAQ broke above it, almost to the 702. The S&P rejecting right now on the 618, or kind of holding somewhat of a support on the 618. Interesting that was the August peak. As well, 618 was the August peak for the, hang on, let's look at it here. The 702 was almost the August peak. So above August levels for the Dow. So yeah, back in August, so in December, the Dow breached the 702 and has kind of consolidated under that ever since. The NASDAQ breached, obviously, the 0.5, 618 and almost to the 702, but this is August. For the NASDAQ, and the S&P was the highest back in August of last year, just now getting back. So S&P's kind of been lagging behind everything else. And one of the interesting things is when you go back and look at these fib retracement levels, and let's just go back to 2009, and you can see some interesting things. So this is one of the market comparisons that, you want to take a look at. Back in 2009, the market at the same time, retraced after that first initial sell-off just above the 0.5, almost to the 618. This is the S&P before ultimately rolling over to that 2009 bottom. A little bit different, in 2000. But if you look at the NASDAQ and you see where the NASDAQ is right here with these bounces and back to that 618, 702 level. If you go back to 2008 and 9, from the initial sell-off, it did bounce back, broke the 618, almost to the 702 before ultimately rolling over and then going down to test the bottom. Same thing back in 2000 in the .com, 2000, 2001. And I was around when this was happening. I was just starting my first company in 2000. A lot of my clients were cashing out of the markets at the top, coming down to my area, buying beach houses and hiring me to add on to them, hiring me to build them beach houses, things like that. I wasn't in the markets at the time, but I was aware of what was going on. Thank goodness I wasn't in at that time. But same thing. So the market, off the initial bottom, which looks a lot like kind of what we're seeing right now with the NASDAQ, rebounded all the way back up twice to the 618 before ultimately rolling over into a longer bear market. So is that something that could be repeating? Potentially. And, there's the bottom right here, rolling back up to that, testing twice in that 618 at 702 level, rejecting in 2009, catching the 0.5 and rolling over. And here we are today. And what's interesting is, the closest thing is this bottom wick right here is kind of interesting, similar looking to what we saw in 2000. Nice big bounce. Again, tons of liquidity pumped into the market after the bottom of 2020 that is still sloshing around out there. I put some tweets out about liquidity and a little narrative about liquidity. That's really still driving markets. There's still a ton of liquidity out there. And unless something really happens, that liquidity is not going anywhere. It has to go to work, right? Capital has to allocate. Pension funds have to make their payments, life insurance companies need to grow so they can meet claims. Investment funds have to return for investors and make their bonuses and keep themselves employed. So there's a lot of capital that has to keep allocating and going to work. And as long as, the Fed is in a pausing situation, the economy's not in a recession, the consumers are still spending, unemployment remains low, inflation is higher than the Fed's target, but lower than where it came from. And consumers are, that was another report, was inflation expectations are at a 2-year low, where consumers now, their expectations for May showed a 1-year inflation expectation down 0.3% to 4.1. So kind of everybody's expecting inflation to kind of roll back over to that 2% within the next year to 18 months. With what the Fed's already done, and then expecting the Fed to start cutting rates again, to stimulate the economy. So as long as inflation is not a problem, the Fed can keep QE and QT going, right? QE and ZIRP, zero interest rate policy, although there's a lot of debate around that. But, after the 2008, 2009 bottom, QE was a thing really until recently with inflation, because we didn't have any inflation problems. So the pandemic kind of obviously created a lot of inflationary pressures that we haven't been able to overcome. So just interesting thing, we're at fib retracement levels. These are very important technical levels, psychological levels, but with as much automated trading, algorithmic trading, and things like that going on, these fib levels are very important. And again, I was in the markets, not in the markets, but watching in 2001. So I've been around since the 2001 .com crash. I know what can happen. I was here. I was in the markets in 2009, got in at the bottom. And then, of course, the recent 2020. And the thing is, a lot of analysts, a lot of investment managers out there, a lot of people that are trading have not been in the markets really since the last couple of years. So there's a lot of inexperience out there, and they just don't know, what the possibilities are and what can happen. And I'm not saying any of that's going to happen. Markets are resilient right now and strong. A lot of liquidity out there, a lot of capital. It's all about liquidity. It's market cycles and liquidity. And right now, there's just so much liquidity out there that the markets can continue to go higher from here until something happens and something breaks, and you just never know what that's going to be. It could be anything. It could be the credit markets like we've seen before. It could be the banks. Still, a lot of speculation that the banks are still under pressure. If the Fed keeps hiking, that'll put more pressure on the banks. If inflation comes in hot or reverses and we continue to get higher inflation, then that could present some problems. Of course, you have geopolitical conflicts, war in Ukraine, you have potential conflict with China, all these different things out there that can really affect investor sentiment in markets. But again, right now, inflation's coming down. The consumer is still strong. The economy is still good. Labor market is still strong. So there's a lot of catalysts out there to keep this going. This is the VIX right here, catching a little bounce off of being at record level lows, not seen since back before that last pop right here in 2020. And then, of course, back in that 2021 level, you can see whenever the VIX is low, it tends to spike, and that's when you get your sell-offs in the market. We looked at that October. That was your bottom in October. Here was your bottom in March. Where was that August level? Right around right here, August and September in this area. So when the VIX is low, look out below. When the VIX is high, it's time to buy. So usually you're at your peaks when the VIX is low. But again, this is just sentiment, volatility index. So, it can do a lot of things for a long time in different levels. Dixie getting a little bounce today, 2-year, 10-year kind of leveling off right now. Again, pretty much everything and everybody waiting. Oil's down. Everybody and everything waiting, for that read by, the Fed tomorrow, or unemployment or inflation tomorrow, the Fed on Wednesday, unemployment on Thursday. So markets are eagerly awaiting those things. Bitcoin continuing on its pattern here in this, falling wedge pattern here, falling, you could call this a bull flag potentially coming off this bottom if it breaks out to the upside. But again, it can roll this way for a long time. And what I've got is a retracement for the fib levels here, where it's coming up on that 302 retracement from this last move, bottom to the peak of the last move, 382.5 at the 23,000 level. 618 at the 21, but ultimately the 702 is the last line of defense at the $20,000 level. A lot of technical confluence out there for price to check that $20,000 level, especially with the pressure that the crypto market is under right now. A lot of people talking about Bitcoin dominance and breaking out, and the Bitcoin dominance really just means that Bitcoin's getting stronger in relation to the rest of the crypto market. The thing about this is Tether's mixed in with this, so it's kind of a skewed view. Here's total 3, which is just the crypto market cap, still well above, consolidation ranges or the peak of 2018, 2019. There's your 2017 peak there, but 2018, 2019 top. When you talk about reverting to the mean, which crypto tends to do, especially the altcoins, nowhere near that. And that I talked about this in a Twitter Spaces the other day. I mean, you're still looking at basically to a level of confluence, 70 to 80% drop to revert to the mean. For the total altcoin market. Bitcoin often reverts back close to the consolidation before the before the run up into a bull market after the halving. So that consolidation is right here around that $18,000 range, $15,000 to $18,000 range, kind of where we were back in November. So without some major issues in the market, that bottom could potentially be in as long as things remain strong. If not, you have that $10,000, $12,000 level where there's a lot of confluence historically going back for a number of years, but we all saw what happened the last two times the markets were in trouble, bottom of 2018 and the bottom of 2020. So these are the things I'm looking at. I'll see you on the next video.